afternoon. Welcome to Capital Account. I'm Lauren Lister here in Washington, D.C. These are your headlines for Friday, October 26, 2012. U.S. GDP picked up in the third quarter, beating estimates. The 2% increase was driven by personal consumption and federal government spending, according to the Commerce Department. Defense spending increased 13% versus a decline of 0.2% the prior quarter. Okay, well, short-term election year reports aside, Jim Rogers is in studio to give us a longer-term perspective and offer his predictions for the year ahead. Plus, Japan remains mired in deflation, according to price data out today, as reported by Reuters, which goes on to say the pressure is on for the central bank to deliver more stimulus to keep the country from recession. Now, you may recall Japan began QE in 2001 and has been keeping its zombie banks in a state of suspended credit animation since the early 90s. How does this lesson jive with forecasts of Western central bank-induced inflation? We'll discuss. And Bunga Berlusconi has reportedly been sentenced to 4 years in prison for tax fraud. In these tough economic times, are we seeing the untouchables actually becoming touchable? Let's get to today's Capital Account. Our guest today is someone with decades of experience investing with particular focus on commodities. I think he's said that he's been a horrible market timer, but lucky for us, he focuses on the long term, and we want his opinion on the big economic picture. It's not difficult to understand why you maybe wouldn't pay attention to the short-term noise when you get a report like today's U.S. gross domestic product estimates, okay? The last ones before the election, I should mention. The Bureau of Economic Analysis reported the third quarter GDP advance estimate was 2%. That was higher than the 1.8% analysts were estimating or expecting, and definitely higher than the 1.3% of the prior second quarter. Now, what contributed to the increase? Consumer spending and federal government spending, wouldn't you know? Namely, the sharpest increase in defense spending in more than 3 years, according to media reports. What did not contribute? Exports fell, business investments were weaker, you know, all the stuff you actually want to see increasing. So joining me to help us see past the noise on a broad range of big picture topics is none other than Jim Rogers, investor and author of the book, A Gift to My Children, A Father's Lessons for Life and Investing, among many others, and someone that I'm so happy to finally meet in person and have in studio after years interviewing you over the ether. Yeah.
Right. I must say, I'd rather be here than on Skype. There's no question about that.
Well,
this is better.
Now, that is just too flattering. I'm happy to have you here in the flesh versus Skype. So thank you for being here.
My pleasure.
Okay, well, let's get past the noise. You say you don't pay attention to the noise. We have these GDP numbers out today, which were fueled by federal spending, wouldn't you know, before the elections. You, though, longer term, looking out next year, you're looking for a recession. Now, what do you think would be the trigger? Obviously, the fiscal cliff is what we hear thrown around a lot in the U.S.
Well, Ms. Lister, first of all, the debt has been going through the roof, and the debt's getting worse and worse and worse here, Europe, Japan, nearly everywhere in the world. In America, we've had economic slowdowns every 4 to 6 years since the beginning of the Republic. Well, you can add next year, 2014, we're going to have another one for whatever reason, and it's going to be worse next time because the debt is so much higher. And yes, they're spending a lot of money in 2012. There's an election in November of 2012, so Washington is trying to get reelected. That happens every 4 years. This is not unusual, but you should be very worried about next year.
So then are you saying that you're predicting and expecting a recession, fiscal cliff, no fiscal cliff, no matter what? You think this is a timing thing, this is coming?
Doesn't matter what they do in Washington. We know they're going to make it worse. No matter what they do, they're going to spend more money. The debt's going to go higher and higher. They're going to mess with the tax system. It's not going to be good. And the next, 2002, we had a recession. 2007 and 8, we had another one. It was worse because the debt was higher. Wait till the next one. the debt has gone through the roof. So the next time around, but it's good for you. You'll have something to report.
You know, that is the flip side. It is nice to have economic news, even if it's bad, for our sakes, but not for everybody else's, not for my personal sake. You mentioned taxes, and I think it's quite interesting because we do have this fiscal cliff, and we have people clamoring, saying, hey, we need to do something about the deficit. Actually, they're politically connected guys saying we need a plan like a Simpson-Bowles that includes spending cuts, but it also includes tax increases or revenue increases. You have Obama saying that he wants to raise taxes on the wealthy. Do you think regardless of who's elected come January of 2013 or further on in this election year, next year, we're going to see income taxes increase?
Well, I would hope not, because many studies show that tax increases are not good for an economy. Maybe they'll jig it around and so they'll have tax increases, but they'll cut it elsewhere. But, you know, even the Chinese 2,000 years ago, they had studies which said raising taxes is not good for the economy. This is not news that raising taxes is bad. No, I don't think that, well, they might raise taxes, but they should not raise taxes. What they need to do, Ms. Lister, is cut spending. They need to cut spending with a chainsaw. They need to go in there and cut spending. We spend staggering amounts of money on nothing.
Yeah, well, and look at, I can bring up a chart of deficit spending and how the deficits just compare over time, over the years, and how staggering they have become. I mean, look, it's second only to, I think that was World War II, that huge deficit as a percent of GDP. So, yes, huge, staggering deficits. You say the debt is even just so much larger than it was in the last recession. Do you think it's going to make a material difference this time, though? Because going back to the 90s, there was a recession. 92, that was a big topic of the election, was government debt, and it was a fraction of the percentage of GDP it is now. So what kind of a material difference would it make?
We're the largest debtor nation in the history of the world now. Not the largest debtor nation in the world, the largest debtor nation in the history of the world. It cannot go on much longer. Maybe we'll get through the next recession with debt going higher, but sooner or later, and it's getting sooner, this is going to be a catastrophe. Eventually, the market's going to say, we're not going to give you any more money. You're spendthrifts. We don't believe you anymore. The same happened to the UK in the 1970s. They were the richest country in the world after the First World War. 3 generations later, they were bankrupt. They couldn't even sell government bonds.
Do you think there would have to be another viable reserve currency before that happens for the United States?
Before we go bankrupt?
Yeah.
Well, our bankruptcy may lead to another viable world currency. The problem is there's nothing on the horizon right now. The euro, as it's constructed now, is not properly constructed to serve as a world currency. Maybe if we have a new euro, if it's reconstructed, if it's reorganized, it would work. We don't have an alternative right now. Can't be the yen, can't be the renminbi yet. No, we're in trouble.
We're in trouble. So you think that the country could potentially, the United States, could have some kind of huge event in the foreign exchange market or some huge bond market collapse before there's another reserve currency?
Ms. Lister, don't say could. Will. Let me tell you, it's going to happen. Whether it's the next recession in 13 and 14 or the one after that, it's finished. Our debt is skyrocketing.
Right. Okay. So then as things get more desperate, as we see another recession, if we do, and things are that much worse because there's more debt, do you think that we'll see more political will to actually go after some people with criminal charges at the top echelons of banks or government? Because just looking at the past economic crisis, we did see in Iceland the first time that a prime minister went to trial or had criminal charges for his role in the financial crisis. Berlusconi just got prison time for tax evasion, which reportedly he may or may not serve. Do you think we could see anything like that in the U.S., where we've seen really no political will to go after
Ms. Lister, in the 1930s, the head of the New York Stock Exchange went to jail. His name was Whitney, one of the finest old family names in American history. Went to jail. A lot of people went to jail. Even in the 1990s, when we had the S&L crisis, something like 1,000 people went to jail. Nobody's going to jail now. This is so absurd and so outrageous. And the reason is because all the people who caused the problems are well connected in Washington, so they don't go to jail. If you did it or I did it, straight to prison.
I know, but do you think that trend will continue, or do you think we'll see the untouchables become touchable as things become more dire?
When the
people figure this out. More people listen to you.
When the next crisis comes, yes, you're going to have people, because it's going to be so bad and people are going to be so angry. I'm already angry, but I'm going to be really angry. But other people will be angry too the next time around. And so, yes, you will see people going to jail, as they should.
I wouldn't want to see you get angry. I wouldn't want to be on your bad side. Going back to 2008, there was the debate on inflation and deflation, which persists today, and a lot of concern about the impact of central bank stimulus. I actually want to rewind to 2008 and play a clip of Hugh Hendry and Liam Halligan. Let's take a look.
We believe that quantitative easing cannot succeed, okay? Now, I then take it one step further and say you shouldn't worry about inflation, okay? Because if quantitative easing can't succeed in this environment, then it is profoundly deflationary.
I fail to see how an enormous increase in base money can be deflationary. I fail to see how massive gilt issuance, huge government borrowing generally, and a wildly expansionary monetary policy can be deflationary.
And yet that is what we've seen happen. So why do you think inflation, massive inflation, hasn't played out as some predicted, despite all the central bank printing, even maybe despite what, dare I say, you predicted when you said an inflationary holocaust was coming?
Miss Henry.
Your
problem is you don't do shopping. Your butler goes shopping for you.
I do my shopping, I assure you.
No, your butler. If you went to the shop, you would know that prices are going up, whether it's groceries, education, health care, entertainment, tolls, everything is going up, except maybe housing. But everything is going up in prices. There is inflation in the world, and it's continuing to get worse, and there will be an inflationary holocaust before this is over. I assure you. Just get somebody to go. You should start going to the grocery store, and you will see. Go to a restaurant. Go to a restaurant.
I promise you, I do all my own shopping. I do all of that. I'm talking about the kind of 1970s inflation that you really see and feel that's major. Why haven't we seen that?
By the way, most countries in the world acknowledge that there's inflation now. India, Australia, China, Norway, Taiwan, nearly everybody in the world says, yeah, we've got inflation, except here in this town, they say there's no inflation. That's because there's an election. The Bureau of Labor Statistics doesn't have inflation, but they lie about it. There is inflation, and it's going to continue to get worse. Be very careful. Go home and buy some groceries and stock up.
No, I know. Groceries are expensive. Fuel has been expensive, though we've seen it go up and down.
Healthcare, education.
That. Healthcare, education, colleges, tuition up 4%, outpacing inflation. But did even you think that inflation was going to be higher, given the central bank stimulus we've seen?
Higher. I don't know what you mean by higher. Who's measuring it? Depends on where you measure.
The way you measure it. The way that you measure it when you go shop in the U.S.
There is a guy, unfortunately I don't shop, there is a guy named John Williams who measures inflation. He says it's well over 6% now. He measures it the way the government should measure it. Some of his studies show it's over 9%. There is inflation in the land right now. I don't measure, but I can see what's happening.
Okay. And then the fact that bonds have done so well, do you see that as any indication that people are expecting deflation? Are they wrong-headed?
Well, that's because the United States government, Mr. Bernanke, is over there with his printing presses. You know, the central bank now buys over 70% of the government bonds in America. Now, if you'd said that 5 years ago or 10 years ago, people would have thought you were totally nuts. It could not happen in America. Now it's happening, of course. If you give me that kind of printing press, I could drive bonds straight through the roof, and that's what Mr. Bernanke's doing. By the way, for full disclosure, I'm short bonds at the moment. I shorted them a month or two ago. But listen, I've shorted them 2 or 3 times and been wrong. so don't think just because I'm short bonds, they're going to go down. But I am short bonds as we speak.
But that means you think that other people are going to think they're going to go down, because I've heard you say it's not about what you expect, it's what you expect everybody else to expect too, right?
Well, yeah, of course. That's the way the markets work. Yes, we will see. I am short bonds at the moment.
All right.
I don't know how much longer this bond. I don't know how much Mr. Bernanke can run his printing presses.
Or what will happen if he's not at the Fed anymore and the next president is at the helm. So we are going to go to break. We'll have so much more with you, Mr. Rogers, who we're so happy to have in studio. That's in just a moment. Also, still ahead, could Apple be following in the footsteps of its enemy, Microsoft? One of our guests predicted this could happen a few weeks ago. He also predicted Apple's earnings would disappoint. We'll delve into that and respond to some of our viewers in tonight's Loose Change. But first, your closing market numbers.
Governor Romney and I, we both agree.
We agree. We ought to bring the tax rates down. I felt the same as the president did.
Governor Romney, I'm glad that you agree.
But let's come back to something the president and I agree on.
And the two of you agree that the voters have a choice between the two of you? Wondering who to vote for when Romney and Obama agree on so many things? Remember, you do have other options come November 6th. Tune in to see the second round of debates between the major third-party candidates on October 30th.
I will fight for oil, coal, and natural gas.
I also promise that I fight every single day on behalf of the American people.
Take it, go to Congress, fight for it. I have my own plan.
All right, welcome back. Jim Rogers has laid out what he sees on the horizon. So now let's talk about what to do about it, what investors, what average folks should be doing. Again, he's investor and author of the book, A Gift to My Children, among many others. He's in studio today, not in Singapore, where we normally talk to him early in the morning for you, late for us. Now we're at a civil hour. Let's talk about commodities, because you are the commodities guru and you've been bullish about commodities for a while, definitely well before 2008. Which commodities are you bullish on?
Well, I'm most bullish on agriculture as we speak right now. We have serious problems facing us in agriculture. You know, we've been consuming more than we've been producing for a decade now, which means inventories are very, very low. But, Ms. Lister, we're running out of farmers. I mean, the average age of farmers in America is 58. In Japan, it's 66. In Australia, it's 58. More people study public relations in America than study agriculture. We're running out of farmers. You should learn how to drive a tractor.
I should. I really should. It's not a bad plan if this whole media thing doesn't work out. Okay, so you're bullish agriculture. When should retail investors get in? Is there a good time or a bad time for just non-institutional average investors?
I've told you before, I'm the world's worst market timer. I'm the single worst trader in the world, short-term trader in the world. If you don't own any agriculture, buy some now and then try to figure out the way when to buy the rest of it. But agriculture prices are going to go much, much higher, or we're not going to have any food at any price. The farmers are dying and retiring.
Okay, and so until we get more farmers, we've got to get onto that agriculture. I also heard you recently say that commodities played into your strategy with JP Morgan. I heard you say in a radio interview that you're short JP Morgan and that you are critical or concerned about their head of global commodities, that Blythe Masters doesn't really know what she's doing or something. So what specifically are your concerns?
I said that?
You said that you were concerned about the head of commodities, and I know it's Blythe Masters, so I'm wondering what your concerns are.
I wouldn't name names, but I am short JP Morgan calls, and part of the reason I'm short JP Morgan calls is because of their commodities department and their credit card department as well.
Why their commodities department? What are your concerns specifically?
Well, the head of the department doesn't know as much as some people know about commodities. And sometimes that person, I won't say whether it's a male or a female, gets overextended and makes mistakes. And I suspect you're going to find more mistakes coming out of the JP Morgan commodities department. So I am short the calls. But there are many reasons to be short JP Morgan calls. Many reasons to be short lots of things. I'm short lots of stocks around the world. I'm short India. I'm short a lot of things. It's not just JP Morgan that I'm short. Let's not tar them. Poor JP Morgan. Okay, fine, but what about their silver position? Does that worry you at all? Or there have been many concerns in the blogosphere about what they're doing with silver. I know. I see all that stuff. I don't have a clue. I don't know what the situation is. JP Morgan says that they don't have any naked positions in silver. I have no way of knowing. Okay. But I know that's a huge discussion in the internet. Okay. And then in addition, you said you're short other things like India. What about Asia? Because
Yes, our viewers are familiar with your story. Everyone asks you about China, so I'm not even going to do that. I want to ask about some other Asian countries, maybe other developing countries, smaller countries. Are there any that you're excited about? Any other growth stories, perhaps
If
Myanmar?
I could put all of my money into Myanmar, I would. I cannot tell you how excited I am about Myanmar. Unfortunately, the stock market is that big, and there are very few ways to invest there for me as a stock market investor, but it is so exciting. I mean, in 1962, Burma was the richest country in Asia. They closed off. Now, 50 years later, Myanmar is the poorest country in Asia, but they're opening up. It is wildly exciting.
So do you think if you had to pick one country in Asia that's the one to watch that could be really exciting, you would pick Myanmar?
If I had to pick one country in the world, it would be Myanmar right now.
Wow.
North Korea is another exciting country. Angola, there are
North Korea?
Yeah,
really?
wonderful things happening in North Korea.
What? Give us that, because you always hear the other side in the Western mainstream media.
In American mainstream media,
yeah.
Yes. Listen, the kid grew up, first of all, he went to school in Switzerland. He knows how it is in the other part of the world, but all of his generals, when they were captains and lieutenants, they went to Moscow and Beijing. Now they go 30 years later and they say, oh my God, you can't believe what's happened in Beijing. You can't believe what's happened in Moscow. And nothing's happened here. So everybody in North Korea, with any power, wants to change things. And it's going to open up, and they're going to merge with South Korea in the next few years. Don't listen to American propaganda. No, don't listen to Japanese propaganda. The Japanese are against it too, but it's going to happen.
Interesting. Where do you go for your sources on stuff like that?
RT.
That's a cop-out. Okay, fine. I'll let you get away with that. What about gold mining stocks? We've seen them underperform gold, and I was just at a conference, Jim Grant's conference, and Pierre Lassonde was talking about how supply is constrained, that it's more difficult to get to gold. It's not as easy to get to, and also that capital expenditures are huge for mining gold. So if you invest in miners, you want that CapEx behind you. How do you look at gold mining stocks? Do you love them, hate them, buy them, short them, ignore them?
I don't own any gold mining stocks. I do own gold. I do own silver. The problem with gold mining stocks is there are hundreds of them. And as Mark Twain says, the definition of a gold mine is a hole in the ground with a liar at the top of the hole. There are certainly good gold mining stocks, I'm sure. I don't own any of them. And part of the reason is I'm not smart enough to know which ones they are.
Well, why do you think that they've underperformed?
Mainly because it's easier to buy gold now. I mean, you can buy gold coins, you can buy gold bars, you can buy ETFs. There are many ways to buy gold now. And I'm not the only person who knows that many gold mining stocks have turned out to be disasters in the past 20 years.
Right. What do you think about physical gold versus ETFs for the average person?
I own futures and I own physical gold.
Okay. For the average person, would you think that ETFs are a good way to go, or no, because it's not really physical gold?
Well, it depends
if you're a small fry.
on the average. Well, the average person should probably buy gold coins as long as they don't pay too high a premium.
Okay.
Then you don't, with gold coins you can buy small amounts. With ETFs, it's usually difficult to buy small amounts. I would buy gold coins. Put them aside. When the revolution comes, you got some gold coins under your pillow. I'm going to go try and get some and stuff them under my pillow tonight if I can afford it. Jim Rogers, thank you so much for affording us the luxury of having you in studio. Now I know where you keep your gold. I'm going to go under your pillow. I'm headed to your place. Stay out of my bed, Mr. Rogers. We're going to leave it there on that note. Thank you so much. Jim Rogers, investor and author. Thank you. Okay, it's Friday, so let's wrap up with loose change and viewer feedback, because this hybrid we've been doing has been working out well. So, Dimitri, Apple reported earnings last night after the market closed. I'm sure tons of people know already what happened, but revenue was right in line with expectations. EPS, or earnings, was worse than expected. But if you watched our show, you'd already be expecting that.
So it's not as if I think Apple is going to collapse or go out of business or start being a going concern. But this is the issue. The expectations of Apple are highly unrealistic. And highly unrealistic indeed. They did disappoint on earnings. Reggie also warned about Apple's margins and the pressure, and why he thinks margins are going to be pressured going forward.
Apple did report gross margin 40% versus 40.5% expected in December, 36% versus 43% expected. So probably smart to go listen to Reggie Middleton's interview October 2nd. Wouldn't you say, Dimitri?
Yeah, I mean, Reggie's been right on a lot of things. He's good at calling tops. He said something interesting, which is Google softened up Apple. And as Google softened up Apple, you can see Tim Cook right there. Bill Gates and Microsoft, well, Ballmer, might make off with that Apple, all right? Because they have the new Microsoft Surface. You should look out for that. I'm still not a big Microsoft fan, but I got to say, man, that's Sergey Brin. Sergey Brin from Google.
Oh, okay, so we have Google as the snake?
Yeah, Google has tempted Apple in that direction, and that's a give and go, and Microsoft's going to run with it.
Bill Gates looks pretty interesting in a wig.
Yeah, it's interesting. It's an interesting little combination.
And that's what Reggie said. He said that it's the competition from Google Android that's one of the impacting factors for Apple.
Absolutely.
Very smart graphic, Dimitri.
Well, thank you very much, Lauren.
I
like the religious graphics, as you know.
Okay. So that brings me to another issue that we're going to have Dimitri comment on. Our rumble in the monetary jungle was really what triggered most of the discussion, argument, and discourse this week on Facebook and our YouTube and all of those various social media outlets. Mike Norman on one side, Carl Denninger on the other, opposing ends of the spectrum on debts, deficit, government spending, QE. Dimitri, you've been on top of this on Facebook and the discussion that's been going on. Let's play a soundbite and get your response.
You spend until you're at full employment, and then you know that the deficit is where it should be.
Okay, so one statement. What's your reaction, and what's been the reaction on,
because
on the
people
Facebook?
get confused when they hear that, and it is kind of confusing a lot when you hear this from MMT or anyone who's basically saying deficits don't matter. The reason why Mike Norman is saying that is because he believes that what's most important is full employment and everything, and he also believes that the government can actually spend and get the economy going. And what I want to make clear is that what Mike Norman is missing is that, yes, if you do spend, you can get full employment and you'll get everyone a job, but what kind of jobs are they going to be? That's a plantation economy. That's hardcore collectivism, and that's essentially what he's advocating. But he just believes that the government can actually do it and not misallocate capital. And that's where I think he and Carl Denninger might disagree. That's where I certainly disagree with Mike Norman and anyone else who suggests that deficits don't matter and that a dollar bill, that a bond is just a dollar bill with an interest attached to it, and we should just print. And of course, anyway, but that's my.
Was that one of kind of the main sticking points in the discussion on our boards and on?
That was
online?
a huge one, and yeah, that was a huge one. That was a big. I mean, ultimately, people get confused about MMT, and I can sympathize because I did too. Until I understood, essentially, this is my perspective, that it's just simply a snazzy way to it's a snazzy collectivist style economic approach.
Okay. Real quick before we go, I want to respond to a few comments about me in that debate. Some people were very kind, said Lauren handled Mike beautifully. That guy was constantly trying to speak over the other guests, but Lauren did a good job taking control. I also received some negative. One said Lauren was too rude and snarky with Mike. His views are challenging, but guests like this should be welcome and treated with courtesy. With courtesy. I just want to be clear before we go that all of our guests are respected. With Mike, I felt I needed to be a little tougher with trying to get him to non-interrupt, to let me go to break. Those kinds of things do change the nature of the debate, but it's never about the views. I absolutely respect every single person that comes on this show and gives us the honor of expressing them. With that, that's all we have time for. Thank you so much for watching. Be sure to come back next week. In the meantime, you can follow me on Twitter. You can go to Facebook, YouTube, Hulu, see all our work. Have a great night.